And I'm Yusuf Al Shabi. And we have some trades that we want to discuss today.
Okay, so what was the first one you were looking at?
OGI.
Mm-hmm. So that's in the healthcare sector. Um, so just technically speaking, what do you think technically? Like, do you think, are you bullish on this?
You know, they have like some news that is like potentially good for the company. So um, I think it has potential to go up maybe like 20% or higher
Okay.
if everything goes well within like the next week or so.
Okay. So the good news. So you're just saying that that's probably some better sentiment that's coming inside there.
Yeah.
Yeah. So better sentiment. Then another thing that we saw was that we saw a spike in volume. So that's also a good bullish sign. And then right there also we saw the MACD is up, along with other indicators I think are up. And just from support and resistance lines speaking, we're seeing that it's inside this range now.
Yeah.
And whereas before it was going down bearish, now it's in this range. And so just technically speaking right there, that's where we see it technically speaking.
Yeah.
Okay, Yusuf, so what's the next one you're looking at?
So the next one is IMMP.
IMMP, okay.
Yep.
So what are you starting to see on this?
So the next symbol is IMMP, and it's a biotechnology company, and the company just received a 2.5 million in tax incentive from the French government. So I think it's gonna have potential to go up within, again, the next week or so.
Okay.
Based on the news right now going on. What do you think about the graph?
Okay, so just looking at the chart, technically speaking, you can really treat this off volume, because anytime you see a volume spike, you tend to see a big move. But right now, over the past, I would say the past 3 months, this thing has made a total reversal to the upside.
Yeah.
And you can look at this in different ways, but just looking at this, technically speaking, it looks bullish right now, and it seems to stay within that. It seems to have that support right there, and it's consistently going higher. And if the volume spikes once again, that's going to go even higher, because it always seems to have a big move when the volume spikes, and the MACD is showing some bullishness right there. So that's just what you see, technically speaking. What's the next thing we're looking at?
The next one is PRQR, and it's a therapeutics company. And on Thursday, PRQR was raised to the street high of $40 from 34 at Citigroup. So that's good news for the therapeutics company. So based on that and other good news this week, I think it might go up a fair bit in the next month or so.
Okay. So again, this being a technical Tuesday, we like to look at this technically, and just analyzing this healthcare company. I believe you said like therapeutic, right?
Yep.
Yeah. So PRQR, and so this right here, most of them are saying reduce and sell, and then some of them are saying like neutral from avoid. Market Edge says neutral from avoid. The street says sell. Research team says sell or reduce.
Yeah.
But whenever they say that, you want to get in because they're more likely to upgrade it up.
Yeah.
Okay. And so right there, earnings per share, $1.35, and so negative $1.35. But this is trading quite a bit above its book value, but at the same time, so even though fundamentally it might not look good, it's going to be a short-term trade where I think that this is largely, you said you're bullish on this, right?
Yep.
I'm not ultra bullish on this. I don't think it's going to go up a gigantic amount. But with that said, I don't think it's going to go lower. I think for a short amount of time, it's going to stay within this range that we've seen over the last couple of days. Over the last couple of days, we've seen this range where 562 is seen as the support within that range, and that about 727 is seen as the high, and right now at the time that we're speaking is 630.
Yep.
And so it's within that range, but we have seen a bit of a spike in volume, and that's a good sign. But it's gone from its old bearish trend right there, and we are starting to see that's going sideways.
Yeah.
And so that's generally something good right there to watch out for. And a way that you can play it is that if you're ultra bullish, you think it's going to go up, you think it's going to go up very quickly, then you usually buy options. If you think it's just going to go up a small amount, you'll usually buy the stock. If you think it's going to stay neutral, if you're neutral to bullish, but you think it's going to stay inside this range, you're going to then just sell a put. And so selling options are generally good then. So that's what I want to do over here, is that you can go out to 15th of November expiration, and you think it's going to stay within that range. You can do a covered call, buy 100 shares, and then the thing with the covered calls that many people say, oh, okay, it increases, you decrease your upside. So you buy this and your downside is 100%, your upside is infinite.
Yeah.
But when you do a covered call, you might limit your upside to only 20%. Here's the thing with the covered call though. It increases your probability from 50-50 probability to now a 70 or 80% probability. So yes, you're limiting the amount of money you can make, and your losses to the bottom are still 100%, but now the probability has gone higher. Do you agree with me on that, or how do you feel?
I mean, I couldn't add anything else. Yeah.
Mm-hmm.
That's pretty
Okay.
much it. So it's a safe bet. I think it's gonna go up.
Mm-hmm.
And even if it doesn't, I don't think it's gonna go down that much.
Yeah,
So,
I think.
Pretty safe bet.
Yeah. Yeah, covered call on this is fine. I think this is more of a short-term trade though.
Yeah.
This is a very short-term, just like we're talking short-term swing trade, like in and out within a week. But yeah, that's what I'm thinking, and then just make money off the time decay that you see on that particular option, and buy it at the low part of the range, get to the high part of the range. That's what I'd generally be doing, and price it right at the high part of the range, which is what we talked about right there.
Yeah.
So I had some trades that I wanted to put on. So those three trades, Yusuf, right here, put on, and I have two trades personally that I'm like looking at, and so there was a ticker symbol AR, and this is Ontario Resources, and it's an oil company, and we were looking at this right here, and just single stock fundamentals, they look great. It's just the macro fundamentals which don't look great. But with that said, I think this is a good bullish position, and to protect us from any more downside, I think a covered call strategy would be good. Anytime it gets up to a strike price, you then just buy back that call, sell another call further out. You can do this every month, or not even every month. I mean, I think this thing trades, yeah, every month. Yeah, I would say every month. So every month, 5% out of the money, and then if it goes up, hits that, buy it back, 5% out of money again. If it goes down, and it goes down more, it goes down, how can I say this? It goes down, the premium decay is more than the percentage of time that's gone by. So the premium decay as a percentage is more than the time that's gone by as a percentage. Then I would buy that back, and I go on. And so I do that again and again. And then another one that we're looking at was a combination of a covered call and a covered put, and doing that on the short-term bonds and the long-term bonds. And this is if you think there's going to be higher inflation, you can take a short on the long-term bonds, 30-year, and then go along the shortest-term bonds out there, like 3 months, very short-term bonds, and then do covered calls, covered puts on those. And usually the three months aren't that volatile, so you might not get as much on covered call. So maybe you might want to do something like a 2-year. You're probably going to have more volatility and more on the covered call side. But I think that's a good long-short trade right there too that I've been looking at. Anything else you have?
No.
Okay. We'll see you next time. Thank you for watching.